Hey everyone, so in this video I'm going to talk about how to build credit and how to increase your credit score, specifically as somebody without much of a credit history. So maybe you have some limited credit history and now you're trying to improve that, or maybe you just turned 18 and you're looking to apply for your first credit card. No matter what your situation is, when you're trying to build credit from nothing or almost nothing, you may face a common problem. In order to increase your credit score, you usually need to be using a credit card, and in order to get approved for a credit card, you usually need to have a credit score. So it sort of becomes a situation of what can you do first there. I'll go over how you can handle that and what your options are as you start to build your credit history. But more importantly, I'll be discussing the most crucial factors of your credit score that you can control right now to increase your score in the short term and ultimately go from having no credit score to a score of 800 and above, just like I did not too long ago. Now first, let me quickly talk about why you should even care about your credit score in the first place. So a credit score is just a quick indicator that tells people like lenders, landlords, and others like that just how likely you are as a potential borrower or a tenant to make your payments. Generally, the higher your score is, the more responsible with credit you look to these people without them considering anything else about you. This score is going to take into account a number of factors, and like I said, the most important credit score factors you usually have full control over, and I'll explain more about that in just a bit. But having a good credit score is going to help you with things like being able to rent an apartment that you want to live in, getting the best rewards earning credit cards, and being approved for loans that you might need in the future, such as a home mortgage loan or an auto loan. And with a good credit score, not only will you be approved for many loans, but with a score that's high enough, you'll also get the best interest rates, which over the course of something like a 30-year mortgage could end up saving you tens of thousands of dollars in interest costs. So if you just turned 18 and you're watching this video as you begin your credit journey, or if you already have a limited credit history and you're just looking to improve that, just know that your future self will thank you for putting in this work now to understand credit scores, because they're an important part of financial literacy and really not taught that much to us growing up. Now to address the challenge of trying to increase your credit score without having a credit card yet, and how to get a credit card without already having a credit score. The solution will just depend on your situation, but here are 3 options that you can look into. First, if you're 18 years or older and going into college, then I would look at getting a student credit card. These types of credit cards usually don't have an annual fee, and the credit card companies that issue them generally don't look at the same income or credit score requirements that they do with their normal credit cards. And that's what I did to start my credit history. So when I was a sophomore over at Penn State and I moved out of the dorms and off of the campus meal plan, I applied for a Wells Fargo student credit card so that I could then use that card to go and buy groceries and cook food at my new apartment. Now there's plenty of student credit card options out there, and the requirements for each one are going to vary, but 2 cards that I would recommend personally are the Discover It Student Cashback Card and the Chase Freedom Student Card. The Discover It Cashback Card gets you 5% back on rotating quarterly categories on up to $1,500 in spending per quarter, and these categories are going to vary from things like Amazon.com, grocery stores, gas stations, and things like that. And you also get 1% back on all other purchases. Plus, whatever cashback that you earn in your first year of having that card, Discover will double it. Discover will also give you a $20 statement credit each year for up to 5 years that you're in college, as long as your GPA for that year is 3.0 or higher. And I mean, for a college kid, that's like $20 sliced pizzas after a long late night of studying. But in all seriousness, the Discover It Cashback Card is a great credit card that can earn you a lot of cash back as long as you activate and keep track of those rotating quarterly categories. For the Chase Freedom Student Card, you won't earn as much cash back since you're only going to be getting 1% back on everything, but they do give you a $50 welcome bonus after you make your first purchase on the credit card. You'll also get a $20 yearly bonus here as well, as long as your account is in good standing for up to 5 years that you're a student in college. Getting the Chase Freedom Student Credit Card also helps to introduce you to Chase as a credit card customer, so that in the future it may be a little bit easier for you to apply for and get approved for the better normal Chase credit cards that they offer. Now, if you're not going to be in college, or for some reason you don't think that you're going to be able to qualify for a student credit card, then you can look at the second option that I have here, which is one of the best options for starting to build your credit history, and that is getting a secured credit card. So a secured credit card is something that is specifically designed for people to help build or rebuild their credit. And the way it works is that you give the credit card company a security deposit, and then they give you a credit limit in return that matches the amount of that security deposit, which is what you can spend up to on that card. So think of it like a security deposit for an apartment. So normally you give a security deposit to your landlord, and then after your lease is up and you haven't broken anything, they give that deposit back to you. Same thing applies here. So say you give the credit card company $500, they in return will give you a $500 credit limit. But don't test that credit limit. You should pay off your balance in full whenever you're able to keep your credit utilization rate low. That's something that I'm gonna explain more in just a minute. The credit card company is going to hold on to that $500 deposit. That way, if you run off and don't pay off your balance, they already have that $500 as collateral, and they can use that amount to pay off whatever you owe them. But as long as you're paying off that secured credit card consistently and showing a streak of good credit habits, after about 6 to 8 months or so, they can reevaluate your account and then upgrade you to a unsecured credit card and then give you that $500 security deposit back. Now, just one quick note here is that you can't actually use that $500 security deposit to pay off your credit card balance. So you're going to want to make sure that you at least have some additional cash set aside to pay off that balance every month. But if you have enough money to put away for a secured credit card for a bit, then this can be a great way to build your credit history. Just make sure that you follow my other credit score tips that I'm going to talk about later in the video. There's so many great secured credit card options out there, and you can find them if you just do a quick Google search. But one card that I would recommend is the Discover It secured credit card. This card has a minimum deposit requirement of only $200, and after 8 months of building your credit, Discover is going to reevaluate your account and see if they can upgrade you to that unsecured credit card and give you your security deposit back. You'll also be earning some cash back in the process, since you get 2% back at gas stations and restaurants up to $1,000 in spending per quarter, and 1% back on all other purchases. And just like other Discover cards, they're going to match your cash back in that first year, dollar for dollar, which will effectively double any cash back that you earn. Now onto the third option to start building your credit, and this is a really great option too, and that is to become an authorized user on someone else's credit card account. So the way this works is that if you have a parent or a family member or a friend or someone else that you're close to who has a high credit score, they can add you as an authorized user on one of their credit card accounts if that account has a good credit history. By doing this, your credit score will actually benefit because the credit card companies are going to report that good credit history to the credit bureaus, and it will not only positively impact that account holder, but also any authorized users on that account. So as an authorized user, you'll actually see a boost to your credit score within a pretty short amount of time. And then what you can do is go ahead and start to apply for your own credit cards and keep the ball rolling and keep your credit score increasing. Now, ultimately, the person who is the account holder is responsible for all payments on that account, including the authorized users. That means it's basically just like you're using their credit card and their credit history, but the card has your name on it. This is a really common strategy for parents to do with their kids. Even if they don't give the kids the actual physical card itself, they could still just add them as an authorized user, and then it will benefit their kids' credit scores. Now, a few important things to note here. So if you're going to become an authorized user, make sure that you're doing it with someone that you trust, someone that has a high credit score, and someone who is responsible with their credit cards. That means they're making their minimum payments, they're keeping their credit utilization rate low, and other things like that, which again, I'm going to talk about next here. Because while their good credit habits can help your score, their bad credit habits could potentially hurt your score. Now, how much your credit score is affected by becoming an authorized user is going to vary from person to person, and it's all going to come down to really the credit card companies and how the information that they report to the credit bureaus is factored into the credit scoring models. So whether you're getting a student credit card or a secured credit card, or maybe some other credit card after you've been an authorized user for a while, next I want to talk about how you should be using them. Now, in order to use your credit cards responsibly, you have to understand the most important factors of your credit score, including the factors that you can actually fully control right now. But really quickly, if you're enjoying this video, I just want to ask that you tap the like button down below and consider subscribing to my channel and turning on notifications as well, so that you'll be notified anytime I post new content like this. Now, these first two factors affect a combined 65% of your total credit score. So by focusing on just a few simple things with these factors, you'll be able to get way ahead. So the first thing that will affect your credit score the most, because it accounts for 35% of the score, is payment history. Lenders want to see that you're going to be able to pay them back and pay them back on time. So what you have to do is make sure that you make at least the minimum payment by the due date for each of your credit cards every month. If you do accidentally forget to make a payment though, you have up to 30 days from that due date to make the payment before it gets reported to the credit bureaus and negatively affects your credit score. And because payment history has such a high impact to your credit score, missing even just one payment is one of the top mistakes that you can make with a credit card. I talked about a few other credit card mistakes that you should avoid in my last video, so I'll put that up on the screen right here, right now, if you want to go check that out as well. To avoid missing a payment, make sure that you set up reminders for yourself so that you won't forget, or just set up automatic payments so that it makes the whole process a lot easier. But make sure that you have enough money in your bank accounts before you set up automatic payments so that you avoid overdrafting. Now, making a minimum payment is just that. It's the bare minimum, so make sure you're actually paying off your balance in full every month to avoid carrying that balance month to month and paying a ton in interest. Carrying a balance won't necessarily hurt your credit score as long as you keep your credit utilization rate in check, but interest rates on credit cards are super high and never worth paying. So if you're just starting off with building your credit, save yourself all of the money and save yourself the stress and just pay off that balance in full every month. And credit utilization or credit usage is the second most important factor of your credit score since it accounts for 30% of it. Your credit utilization rate is simply the total balances across your credit cards divided by the total credit limits across your credit cards. In general, it's recommended that you keep your credit utilization rate at least below 30%, but me personally, I keep this rate somewhere in the range of 1 to 5%, and I would recommend that you do the same too if you can. Credit utilization seems to be a factor that people either know very little about or they have a misconception about. I've heard stories of people that carry a balance month to month because they think that this positively impacts their credit usage, which in turn increases their credit score. But carrying a balance month to month is not going to help your score. What lenders really want to see is that you're responsible in managing and using the credit limits that you've been given. So a low credit utilization rate will show that you're not overspending and at risk for not being able to pay them back. Now, keeping your credit utilization rate low requires that you not only be aware of your spending, but you also need to be aware of the credit limits that you've been given across all of your credit cards. So what you should be doing is you should be tracking this information somehow, whether you use an app like Mint or whether you use a spreadsheet like I do. Anything you can do to keep track of your spending and your credit limits is going to help you. If you can manage your credit utilization and never miss a minimum payment, and you do this consistently, then you will get off to a huge start in building your credit. Now, the remaining 35% of your credit score is represented by some smaller things, some of which you can control and some of which you really can't control as much. So something like new credit accounts and hard inquiries from applying for new credit is going to represent about 10% of your score. And you can control that by simply limiting the amount of things like credit cards that you apply for, especially at the beginning of your credit history. I know on this channel I talk about some really cool credit cards that offer some great benefits and rewards and cash back, but you have to recognize that credit is a long-term game. The more patient you are now, the better your credit score will grow to be, and then you can slowly start to apply for these better credit cards. Another factor of your credit score is the credit mix, which accounts for about 10% of that score. And this is just looking at the different types of credit accounts that you have, such as credit cards, student loans, home mortgages, auto loans, and other things like that. But this is one of those factors that you don't have nearly as much control over, but luckily it's not as important as some of those other factors. So you shouldn't just open new credit cards or take on additional debt for the sole purpose of trying to improve the credit mix portion of your credit score. Adding different credit accounts over time as needed in your personal life will sort of allow you to naturally improve that credit mix. And the last major factor affecting your credit score is the length of your credit history and the average age of your credit accounts, which represents roughly 15%. This is another one of those factors that you really don't have that much control over, and you just have to realize that with credit, the best time to start was yesterday, but the second best time to start is today. I'm 25 and I have a bunch of credit cards and other credit accounts, but my oldest account is only 5 years old and my youngest account is 5 months old. But I don't have any control over that, so all I can do is just practice good credit habits with some of those other factors that I talked about in this video, and the average age of my credit and the the credit history length will just take care of itself over time. Now, this video is just a general guideline, and you should really do as much of your own research as you can, since this is not financial advice, but hopefully it was at least useful to you as you begin your credit journey. Be sure to comment down below if you have any questions for me, and I'll get right back to you. And if you're still watching up until this point and you enjoy this video, go ahead and comment down below what credit score you want to achieve in the next 2 years. If you want to learn more about credit cards and some other personal finance topics, then go ahead and check out some of the videos that I'm going to put on the screen right now. As always, thank you so much for watching, and I hope that you have a great day.